Hey everybody, Brian here. It's Wednesday the 25th. Just want to show you the comments that I had before the market opened today. I'm saying that this market will continue to run shorts over. It's typical for more stocks to start to participate in the upside, even as the market slows. So what I mean by that is, even with this market, maybe going to find a little bit of resistance or slow down, I think that the individual stocks will start to see a lot more opportunity to the upside and only a full shorts into it until we actually see evidence that the market is turning lower. So basically, don't throw your money away shorting the market. And clearly, that was the right way to look at this market again today, as we are above a rising 5-day moving average. If you made any short sales, of course, yes, you could have made money, but what were the odds? Were the odds good for making money on the short side? Absolutely not. I mean, we probably sucked in some shorts right here briefly, which is from that failed breakdown came this faster move higher. So the buyers continue to be in control of this market, and we're up at important levels. If we take a look at the trend line that goes off of the last summer, we're back up to this level once again. And as I had pointed out the other day, it kind of looks like a cup and handle in here. But more importantly, we're above a rising 5-day moving average. We had shaken the sellers out right in here and got new shorts in who ended up basically capitulating the last few days. So while it's we have the potential to find resistance in this area, there was nothing here indicating that there is a low risk place to short this market. The path of least resistance continues to be higher. What we'll do is we'll monitor. I think an important volume weighted average price will be from the beginning of this move, which began on Tuesday. So for tomorrow, we'd like to see it hold in this area, and of course that is a moving volume weighted average price. And as we get new information, that will change as it did today. But that's going to be something important to keep an eye on tomorrow. The Qs, as I had mentioned yesterday, I was hoping we would see a pullback and then we would want to be a buyer on strength somewhere in here with a stop above the higher low. That didn't occur. Instead, what we saw was further continuation to the upside. Here's our volume weighted average price from this move. So I think down towards 108.75, a little pullback into that would not be a bad thing at all. And that even down to the 50-day moving average. If we can see now that this level, which a lot of people were expecting to become resistance, and we were careful to say it's not resistance till after the fact, but if we can see it pull back down towards the 50-day moving average near about that 108 area, then I think that would most likely become a level of support. Even if we were to come back into here, I would prefer we don't pull back that deep. But looking at the 30-minute time frame, if we were to pull back towards 107.50 to 108, I don't think that would be a bad thing for this the health of this market. And the Qs that is also looking like, well, we've got this downtrend line from late last year, and perhaps we continue up towards that before this market does in fact find any actual resistance. But right now there is no evidence of resistance in the Nasdaq. It's higher highs and higher lows above a rising 5-day moving average, and the same is true, of course, for the Russell 2000, which is perhaps headed back up towards the 115 level. This is a potential level of resistance. It's certainly an area of interest that we want to be aware of, that there might be enough supply to offset this current upside momentum. So perhaps we're going to run up towards 115, 115 and a quarter before this little bout of strength is over. But it typically does not roll straight over. So tomorrow, we'll kind of keep an eye on 112.75 to 113. And if we can hold above there, we'll continue to give the benefit of the doubt in the intermediate term to the buyers. And of course, we've got that rising 5-day moving average as well. So nothing to be bearish about. And as we've been mentioning, the semiconductors have been the leader, and I was talking about how they could be an example for what's to come in the broader Nasdaq overall. And the semiconductors are, obviously you look at this group, and it's certainly outperforming here recently with this strong move. And I was thinking that maybe we would see a little strength like this and then come back and test that 54. That never happened. So don't get stuck into the mindset that this trend line has to become resistance. If this Nasdaq does what the semiconductors are doing, then they'll be up near this level in the next couple days. Let's trade each market based on its own merits. Know where to get out if you're long. So if maybe you want to reduce your longs if it breaks below the volume weighted average price since the event, and then look for places to potentially add in the future, or if it rolls over, then to get out completely. But right now, there's no evidence that sellers are gaining control. Even in the strongest group here, which began its move higher 4 days ago, we can see that we're well above that volume weighted average price, and that volume weighted average price tomorrow will be tied in pretty much with the rising 5-day moving average down near 55, which would be a point lower, or close to 2%, but still would not do anything to damage the strength that we're currently seeing in here. The biotechs, as we've mentioned, perhaps we're headed for this bigger level in here. We have areas of potential resistance, one at about 280 before that, and you have to ask yourself, is the risk worth the potential reward? Well, after it's just rallied from 256 to close to 276, so maybe what is that, about 7% or so here over the last week. I don't think it makes sense to initiate a swing trade, but if you're long, then you look at the definition of trend and you say, I'm going to put my stop underneath these higher lows, similar to what we've been talking about in shares of Apple, that we've been talking about these higher lows being the place to present your stop. And now I would say even up towards maybe 98 and a half-ish would be a good place for a stop. As we mentioned, when the stock was when we first identified that it looks like from a failed move could come a fast move higher, we were targeting, well, we weren't really targeting, but we were saying it had the potential to get to the 20-day moving average, which at that time was $97.20 a share. Well, that's where we thought it had the potential to go, but that doesn't mean that's where you sell. You sell based on the definition of trend, and if that definition of trend is not violated, then you continue to raise your stop up underneath the most recent relevant higher low, and that is relevant to the time frame that you're trading on.